What's up everyone, William Ryan here. Welcome to my channel, Optimal Advance. Um, I am a trader from Toronto, Canada, and I'm super excited to have you guys here with me today, tuning into this video. I am beyond ecstatic to start providing value to the trading community and help people get to where they want to be in their trading. So what's going to be covered on this channel, I'm going to be doing trade reviews, trade recaps, um, live streams potentially. I plan on doing that starting in September. And you name it, everything trading. We're going to be trading everything. We're going to be dabbling into everything. And I can't wait to get started and for you guys to be alongside in the journey. So in this video specifically, I'm going to cover the annotations that I have in the chart as of right now, and then once I go over those elements, I'm going to explain to you guys what I am anticipating for Bitcoin in the future and what I believe is going to be happening with this asset class. So as you guys can see here, we have institutional order flow is bearish. Okay, price has been moving bearish, moving to the downside since last year in December. Okay, this is a nice healthy sell-off, right? Very volatile, very healthy market. If we look at the start of this big down move here, we have a raid on the buy side liquidity pool resting here. Price comes up, sweeps the high, we reject, and then price takes out this swing low. So this is a market structure shift. When the market structure shift happens, okay, we want to be looking for optimal trade entries. This is one of ICT's most famous smart money tools, and I personally recommend it myself. I use it myself. It's a small part of my model, and it is very, very beneficial when looking at the current dealing range. When this swing low was formed here, the swing low rate in here, after taking out this low, we want to be looking for optimal trade entries, right? We want to be looking for bearish optimal trade entries because we took out the high and then we broke structure, right? Institutional order flow is bearish. So we want to be looking for premium prices to sell. How do we figure out what is a premium price? Okay, so what we're going to have to do is we're going to have to find the current dealing range. So we have this candle's high in here. This is a swing high. I'll zoom in. So you have this swing high right in here. Okay, that is our range high, and this is our newly formed range low. So when price comes back up above the 50% level, we are in a premium, right? So when price comes back above the 50 level here, price is in a premium. If we're going to be sellers, if we're going to want to short the marketplace, we want to be shorting at or above the 50% level. Okay, now that we've covered that, let's take the fib away. The next thing you want to be looking at and marking out is, right, we have this ICT bearish order block here, along with the fair value gap. So when price rallies up into here, right, hits the order block, comes into the fair value gap, takes out some highs in here, right, this is a valid sell, right? This would be an optimal trade entry sell. Okay, very, very clean, nice weekly setup. One of the nicer actually swing setups that I've seen in all of my trading. This is probably one of the nicest ones. So if we move down to a daily, I'll zoom out. Right, we can see the fractal in a different manner, right? So you have this consolidation in here, right? A clear-cut consolidation. So from this low to this high, price is consolidating. Price then expands up, takes out the highs. Okay, these equal highs. So smart money is pairing their orders. Okay, they're going short here, while these retail traders are buying on a breakout. They had the retail traders had their stop here. Boom, it gets smashed. They start buying on a breakout. They get smashed again. Okay, so you guys can see here very clearly that the consolidation and the manipulation, right? You see how it's very lethargic? Price, yes, it is creating higher highs and higher lows, right? But the price action is very, very lethargic. Okay, we're not getting to where, it's not doing it with much speed. Like this price leg here has some speed. This is what you want to see for low resistance liquidity runs. But this here, this consolidation manipulation, high resistance liquidity run. So this is the manner in which price will book. We will go from high resistance liquidity run, so consolidation, manipulation, to distribution, which is the low resistance liquidity run. So you can see it again over here. We have consolidation, manipulation, distribution. Okay? Keep that in mind for when we get to this portion of price action in here. Okay, so the last thing that I want to mention about the annotations that are already in the marketplace, or that are already on the chart, right? These equal lows in here are going to be a big draw on liquidity. Right? Whenever you see equal lows or equal highs, right? There's buy and sell orders resting above and below the marketplace. Okay, so the algorithm's always going to want to reprice back to those levels to pick up more orders. Okay? Price is either going to seek two things. It's either going to seek liquidity or fair value. Right? So if we were to take this short here, hypothetically, right? Price comes up into the order block. We drive lower, targeting the sell side liquidity here and the fair value gap. Right? So remember what I just said. Price will either seek liquidity or fair value. Right? And oftentimes they will be in and of around each other. Okay, in a lot of the setups that you will see. So we'll move back down to the daily. Right, so that takes us to current price action. Prices from this optimal trade entry on the weekly, price has went from high resistance liquidity run, right, consolidation, manipulation, distribution, into the fair value gap and taking out the sell side liquidity on the lows mentioned earlier. Keeping that in mind, right, we have essentially the same thing unfolding here in current price action on the daily. So if we were to draw our fib from swing high to the swing low, we can see that we have come up into 50%. And we also have a fair value gap here. Right? So price drew up into this fair value gap, right into consequent encroachment. We just wicked into a premium, and then so far we have rejected. All right, now I have a question for you guys. What kind of price action is this in here? Right, this whole move up here. So from this swing low to this swing high, what kind of price action is this? I was talking about it earlier. It's a high resistance liquidity run, right? It's lethargic. We're not getting price moves like this or like this, right? It's slow, it's lethargic. It's not in a hurry, right? So remember what I said before. It goes from high resistance liquidity run to low resistance liquidity run to high resistance liquidity run to low resistance liquidity run. So what I am anticipating is, since we have price consolidating and manipulating higher into the consequent encroachment of the daily fair value gap, I think we're going to start to see big down close candles, right? Price is contracting here. Okay, so now we're in a point of fair value. Price is going to expand here. Very, very shortly, I think price is going to expand. Right? We've been squeezing these candles for too long. We're very, very tight in here. We're very, very close to an expansion. For me personally, with the dollar being bullish and interest rates being where they're at, I see the dollar continuing its bullishness, and I see crypto continuing its bearishness. Right? There's no reason for me to be calling a high or a low on a monthly chart right now. I'm going to stick with the order flow on the monthly and weekly and daily, right? But there's no reason for me to be calling this down here as the low. Okay, there's no reason for me to do that just yet. So that's why I'm sticking with higher time frame order flow, and I suggest that you guys follow higher time frame order flow as well. I've noticed through my experience trying to catch highs and lows on higher time frames and going against the higher time frame order flow, it becomes very, very difficult and very, very stressful. Don't get me wrong, there are setups that we can yield some pips off of, but for the most part, it is not worth the squeeze. You might as well just be patient and wait for the low-hanging fruit. Moving on to the 4 hour, you can see here that we've had this buy side liquidity pool taken, right? Not only once, but twice, 3, 4 times. Okay, similar to this example here, price expanded up, took out these equal highs, right, to then go short. It's the same kind of thing that's happening here. Price is coming up, taking this liquidity out, pairing orders to then go short, right? If we're to go back to the high resistance, low resistance theme, right, I can see this as being the consolidation, manipulation, distribution. We have this high taken out. If we are bearish, this high now becomes a low resistance liquidity run. So if we are bearish, there is no reason actually for this high to get taken out at this point. If you look on the sell side of the marketplace, what do you guys notice? We have equal lows here. We have equal lows there. And lastly, we have equal lows here. So you can see there's a bunch of layered liquidity below the marketplace that, in my opinion, the market is going to want to seek. Right? If order flow is going to continue on the higher time frames, these are going to be low-hanging fruit objectives. Price should be sliding through these like butter. Right? So if we go down to, actually I'll zoom in here and we'll take a look at this fractal in here a little bit better. So we've taken out this high here, okay? Price has now taken out this low. So market structure now is bearish. Okay, on the 4 hour, right? Price, we have purged liquidity. We have broken down, taken out the swing low. And now we have also primed sell side liquidity again. There's low here, low here, low here. So they're layering sell side liquidity. It's too clean. It's Candyland. Okay, these orders are too easy for the pickings. Okay, there's lots of orders to be taken down here, lots of money to be taken. Okay, so we have a fair value gap up in here. Beware of this. We could pop up into here. And then move lower. Okay, or I would prefer price to just continue to move lower and expand to the downside, taking out at least this low here. I'd like to see candles like this, right? Big, beefy, down close candles. That's what we want to see right now, attacking this low. Okay, that would yield good for our bearish narrative, and that is what I'm anticipating to see. Like I said before, we can drift up here into this fair value gap, but I would prefer if it didn't at this point, okay? I prefer for it just to start taking out lows. So if we continue to get our bearishness, right? Order flow on the monthly and weekly, I'm expecting price to either fill in this gap on the monthly right in here, and then if we trade through this gap on the monthly, if we trade through it and close below it, I think we're going to be targeting the sell side liquidity here at 3,000. Okay, I know that's a very unpopular opinion, but at the end of the day, and in the context of the world and the market environment that we are in, people have to understand that this is a very possible outcome, right? You can't really predict tomorrow at this point. Okay, anything can really happen. And especially with the market structure that's in place and the sentiment that's in place, with the interest rates moving up and dollar moving up, and in my opinion, no sign of them slowing down, these equal lows are very, very, in my opinion, likely to get tagged. There's so much money underneath here and liquidity for smart money to pair their orders, because they're loading up on shorts. They've been shorting this whole time. They shorted up here, they shorted here, and now they're about to short here, if this is an area of interest for them. Right? They're going to offload all their orders below here, all their take profits. Right? So I know it's an unpopular opinion, but I honestly think this is one of the outcomes that can happen. What invalidates this outcome, or what invalidates the bears, is, for me personally, I would have to wait until we get back above this fair value gap. Right? Like if we come back up into here, right, this could be an optimal trade entry to go short, right, from this swing high to this swing low. I don't think it needs to come up here. I would much rather this gap get left open. But if we do end up closing above this gap and then retracing back into an order block of some sort, right, or fair value gap, then I would probably be anticipating longs, right, continued longs for Bitcoin and Ethereum. But for now, since everything is bearish, Forex is bearish, Bitcoin is bearish, dollar is bullish still, there's no reason to start going short on the dollar just yet. We need to be proven wrong, and one of the situations on the higher time frame that would prove us wrong is this asset class here. If we started to trade above these gaps in here, then I would be looking for the liquidity above here, but that's still a long ways away. I'm still looking for shorts to target the lows down here and the fair value gap down here. Alright guys, that's going to be it for my first video. I thank you guys so much for joining in. Subscribe, like, follow the channel if you're interested in trading content. I'm going to be dropping videos pretty much every single day. And thank you for watching till the end if you have, and hope you guys have a good day, and we will see you in the next one.